Hello, and thank you for visiting the seldongroup.com free video information site. The Seldon Group is committed to providing you with the most up-to-date free information and training available to help with your real estate needs. Our topic is about the options currently available to homeowners who are facing the possibility of a home foreclosure based upon the hardships that they are experiencing in our current economic crisis. For many years, owning a home meant making money. Prices continue to go higher and higher from 2003 to early 2007, when both Wall Street and our economy came very close to a financial collapse. Soon home prices began to decline at such a rapid pace that many homeowners simply owed more on their home loans than the homes themselves were worth. These events caused everyone to worry about finding a way out of debt. Are you worried about how you can possibly keep making your home loan payments? Are you out of work or temporarily laid off? Do you owe the bank more on your loan than your home is even worth? You should know that you are not alone. Hundreds of thousands of Americans are suffering from this great recession. Many good men and women just like you are struggling with how to keep up with their home loan and credit card payments, while their employers often go bust or required to lay off their workers in an effort to survive this economic crisis. If you are in this growing group, you need to know what your options are. Sure, you can simply do nothing and wait for the inevitable knock on the door from the sheriff and his staff, arriving to forcibly remove you and your belongings from what was once your home and has, as a result of foreclosure, become the bank's home. Or you can fight back by learning everything you can about your foreclosure avoidance options and how best you can protect yourself and your family. Because everyone is affected by foreclosure. But what foreclosure avoidance options are available for you to consider? Number one, you can simply call your lender. Don't be afraid. They want to talk with you to see if there is any other alternative than foreclosure available. They want to receive their money and not your home. Despite what some may tell you, lenders are not in the real estate business. They do not want to own and manage your home. Number two, there are also foreclosure prevention counseling services that are provided free of charge by both federal and state nonprofit housing counseling agencies. There is no need to pay a private company for these services. So if you receive a phone call from an individual or company promising to modify or change your loan if you pay them an upfront fee, beware. It is likely a scam designed to get your money and perhaps even your home illegally. Number three, reinstate your loan. Can you borrow from a family member or a friend? Can you borrow from your retirement fund? Keep in mind that retirement plans will often allow a withdrawal in order to avoid foreclosure on your primary residence. Number four, try to sell your home if you have enough equity. Can you list your home for sale and realize enough at closing to fully pay off your current home mortgage and the cost of sale? If so, it's a great option. Number five, refinance. Your loan must usually be current to qualify. Go to your current or a new lender to refinance your current home loan into a new one with better terms for your needs. Number six, repayment plan. You may qualify if you have experienced an involuntary reduction in pay or an increase in your living expenses. Normally, a complete financial packet must be required depending upon the degree of your delinquency and the selected repayment term. Next, ask your lender for a temporary forbearance. You may qualify if you have experienced an involuntary reduction in pay or an increase in your living expenses. You must show that you would be able to bring the loan current at the end of the plan. Number eight, request that your lender approve a pre-foreclosure sale or short sale. This option will allow you to sell your property and pay off your mortgage loan to avoid foreclosure and damage to your credit rating, even though you may not have any equity in your home. Number nine, loan modification. You may qualify for a loan modification if you've experienced an involuntary reduction in pay or an increase in living expenses. You may be able to refinance the debt or extend the term of your mortgage loan during a specified time frame. This would help you catch up by possibly reducing your payments to a more affordable level for a period of time. Number 10, deed for lease. A recent addition to the many options available to distressed homeowners. This process allows qualified applicants to deed the title to their property back to their lender while being permitted to continue to reside in the home for a limited time and by paying rent. The goal being to create the least amount of pain to the homeowner and the least amount of damage to the property. Ultimately, the owner must move out of the property when it is either resold or the owner fails to comply with the terms of their lease agreement. Number 11, deed in lieu of foreclosure. As one of the last resorts, you may be able to voluntarily give back your property to your bank. This won't save your home, but you can qualify if 1, you are in default and don't qualify for any of the other options, 2, your attempts at selling the home were unsuccessful, and 3, there are no other liens against the property. Number 12, personal bankruptcy. If one of the foregoing options just is not in your best interest, you discuss with your attorney how a personal bankruptcy may help you in overcoming the painful effects of the current economy and job market. And number lucky 13, foreclosure. If you can't qualify for one of the foregoing alternatives, you may not be able to avoid a foreclosure of your home. In Washington state, the majority of lenders exercise a private right of sale clause in your loan security documents to conduct a private non-judicial sale of your property according to strict rules and timelines that ultimately culminate in a trustee sale where your home is sold at auction and the winning bidder is then granted title and occupancy to the property. You will then have to move out. Each of the foregoing options has significant legal and tax implications based upon the individual circumstances of the homeowner, the type of real estate, be it personal or investment, and the timing of the transaction. The Selden Group always recommends that every distressed homeowner should consult with their attorney and tax professional first before taking any action or before selecting any one or more of the foregoing foreclosure avoidance options. At the Selden Group, we know the short sale and foreclosure process, and can assist you for free and with no money paid to us by distressed homeowners ever. We are experienced negotiators who work hard for our clients to obtain the very best terms when undertaking a short sale of their residential or investment real properties. If you have any specific questions or think you can benefit from our assistance, please call or email us at theseldengroup.com to schedule a personal and confidential consultation to discuss your short sale options in greater detail. Remember, at the Selden Group, we are here to help you. We hope you enjoyed this free video.